You know, every successful company has a story. Long before an initial public offering actually reaches the hands of retail and institutional investors, there are decades of hard-fought decisions, strategic pivots, restructurings, and quiet, under-the-radar milestones that fundamentally shape the core of the business. Today, we're tracing Indo-MIM's remarkable 28-year journey to an IPO, and we are doing it strictly through the lens of its official draft red herring prospectus, or DRHP. No rumors, no outside noise, just the facts as they are legally filed.
All right, here is our roadmap for this explainer. First, we'll cover why corporate history matters. Then, the birth and milestones. Third, global business expansion. Fourth, current corporate structure. Fifth, preparing for the IPO. And finally, key takeaways for investors. Let's get right into it.
Section 1. Why corporate history matters, the foundation of execution.
Now, you might be wondering why analysts and institutional investors absolutely pore over decades of history before they even glance at a financial statement. I mean, it's a fair question, right? Why does a company's name change from 20 years ago actually matter today? Or why do we care about a factory they opened way back in 2011? Well, here's the thing. A company's past decisions, its geographic expansions, and its legal restructuring reflect its management's ability to execute complex strategies over a long period of time. Financials tell you what a company made last year, sure, but corporate history tells you if the company has the maturity, the resilience, and the operational DNA to actually survive and thrive in the public markets. Simply put, evolution is the ultimate proof of execution.
Section 2. The birth and milestones, decades of evolution. Digging into the DRHP, it reveals the company was originally incorporated on April 12, 1996 in Hyderabad. But interestingly, it wasn't called Indo-MIM. It was born as AFEF Technologies India Private Limited. Back then, it was just a private limited company with early objectives focused on manufacturing and fabricating engineering components. It was a pretty humble beginning for what would eventually become a global manufacturing powerhouse.
And this brilliantly illustrates their strategic shifts over the years. According to the prospectus, the name didn't stay AF Technologies for long. In August 2001, it changed to Indo-US MIM Tech Private Limited to comply with the conditions of terminating a collaboration agreement. Then, just a month later, in September 2001, they tweaked it to Indo-US MIM Tech Private Limited, literally just dropping the H, specifically to align with the registered name of their US branch office. Finally, in February 2016, they consolidated their brand identity globally, changing the name to Indo-MIM Private Limited to match their registered trademark. So these aren't just random administrative updates. They map directly to a company actively aligning its legal identity with its international growth.
Let's look at their major corporate milestones to see how this builds a picture of aggressive, calculated expansion. They commenced operations in 1997. By 2011, they had commenced operations in China. In 2016, they incorporated entities in both the United States and Mexico. But they didn't just grow organically. The DRHP notes some massive strategic acquisitions. In 2020, they acquired Triax Industries in the US, and in 2023, they expanded into the UK by acquiring CMG Technologies. This timeline shows a really relentless push outward.
Section 3. Global business expansion, scaling manufacturing.
This brings us directly into how that historical timeline translates into physical scale today. As of the date of the prospectus, Indo-MIM operates an impressive 15 manufacturing facilities worldwide. We're definitely no longer talking about a single private entity in Hyderabad. We're looking at a deeply integrated global supply chain.
And these facilities aren't just dots on a map. They represent a highly calculated dual-shore manufacturing strategy. The DRHP outlines that they have 6 facilities in India, which provides them with cost and logistical advantages, 6 in the United States, 2 in the United Kingdom, and 1 in Mexico. With over 4,300 employees, this network positions them with the world's largest installed capacity for metal injection molding, or MIM, products as of March 31, 2025. They've essentially built a system designed to serve both Indian and global original equipment manufacturers, benefiting from massive economies of scale.
And all that scale translates directly into their top line. According to the DRHP's industry overview section, this massive global footprint generated approximately $262 million in YESIM revenue for the fiscal 2024 to fiscal 2025 period. It's a real testament to how effectively they've monetized that global infrastructure.
Section 4. Current corporate structure, organizing for the future.
So how do you actually manage a footprint this large across multiple continents, tax jurisdictions, and regulatory environments? Well, you need a robust, heavily organized corporate structure. The DRHP maps this out clearly for us.
At the very top sits the parent company, Indo-MIM Limited, based in India. Beneath it are 4 direct subsidiaries, Indo-MIM Inc. in the US, Triax Industries also in the US, CMG Technologies in the UK, and Phoenix Deventures too. But it actually gets a bit more intricate. They also have an indirect subsidiary, Indo-MIM Mexico. Interestingly, Indo-MIM Inc. in the US holds a 49% shareholding in the Mexico entity, but because it exercises significant control and bears the risk, it's accounted for as a subsidiary. This is exactly the kind of structural matrix institutional investors look at to ensure a company is legally fortified for international operations.
Section 5. Preparing for the IPO, the final steps.
Transitioning a nearly 30-year-old private network into a publicly listed company doesn't just happen overnight. It requires intense governance preparation and legal housekeeping. The DRHP outlines a very deliberate sequence of events. First, in 2020, they shifted their registered office from Telangana to Karnataka, settling in Bangalore. Then, in May 2023, they executed a subdivision or stock split of the face value of their equity shares, breaking them down from 5 rupees to 1 rupee each, which is a super common move to increase share liquidity ahead of public trading. By September 2023, they passed a special resolution to officially convert from a private limited company to a public limited company. And finally, in January 2024, they received their fresh certificate of incorporation under their final public-facing name, Indo-MIM Limited.
Section 6. Key takeaways for investors, what we learned.
So, what should you actually take away from this historical deep dive? Why did we spend all this time looking backward before looking forward? Well, institutional investors look at these details because a company that can successfully navigate legal name changes, complex international acquisitions, and rigorous IPO restructuring demonstrates something absolutely crucial: long-term execution capability. It shows a management team that isn't just reacting to the market, but actively building a framework spanning 15 global facilities and multiple subsidiaries specifically designed to survive in public markets. You really have to analyze this history alongside the financials, because the numbers are quite simply the result of the historical structure we just walked through.
But, a structure is only ever as good as the people running it. In the next explainer of our DRHP breakdown series, we're going to explore the management and leadership section to understand the exact individuals responsible for leading Indo-MIM. We'll be looking at their backgrounds, their compensation, and governance. But I'll leave you with this final thought. If this management team could build a sprawling, profitable global empire in the shadows of the private sector, what are they going to do with the massive influx of capital from the public markets? Keep reading the fine print, and thanks for joining me on this explainer.